We're going to explore the best Vanguard funds to build and grow your retirement nest egg, so stay tuned for the full episode. Welcome back. This is Richard with Wisdom Investor. We have some good information to share with you today. Now, in this channel, we also investigate Social Security, when to retire, how much money you need to retire, and much more. And today, we're going to investigate the Vanguard funds and look at the best funds to help you build and grow your retirement nest egg. Now, when we talk about the Vanguard Group has trillions of dollars in both mutual funds and ETF funds. So today, we're going to build some portfolios to help you build your retirement savings. And we're going to look at both ETF funds, which are exchange-traded funds, and we're also going to take a look at mutual funds. I've evaluated the Vanguard funds and put them into 3 different risk categories: a low, medium, and high risk categories. Now let's take a look at our sample portfolio for low risk tolerance investors. We're recommending 40% in equities, 60% in cash and bonds. We have 2 funds here that meet our criteria for low risk tolerance investors. We have the Vanguard Wealthy Income Fund and the Vanguard Balanced Fund. Now these are both mutual funds. So we're recommending 20% in the Vanguard Wealthy and 20% in the Vanguard Balanced. So if you had $100,000 to invest, $20,000 would go to Vanguard Wealthy and $20,000 would go to the Vanguard Balanced Fund. Now at this time in the current market conditions, I recommend dollar cost averaging over a period of say 12 months. For the bond or cash portion of the portfolio, we're recommending Vanguard Short-Term Investment Grade. It's a short-term bond fund. Or have your money in cash, perhaps a certificate of deposit. Right now, they're paying anywhere between 2 to 3% for a 1-year or 3-year CD. Interest rates are still rising, and when interest rates rise, it's not as favorable for bond funds. So right now, under the current environment, I'm using certificate of deposits. Now, when interest rates start to drop again, I think that would be the best time to start using bond funds, in my opinion. Let's dig into these 2 mutual funds a little deeper and see why they meet our criteria for low-risk investors. First area I want to look at here, the Vanguard Wealthy Fund is 40% stocks, 60% bonds, and the Vanguard Balanced Fund is 60% stocks versus 40% in bonds. These 2 funds have a lower percentage in stocks. That makes them better for low-risk investors. You'll also notice that the Vanguard funds have a low expense ratio. The Vanguard Wealthy Fund right now has a dividend yield of 3.26%, and the Vanguard Balanced Fund has a dividend yield of 2.11%. Our main goal in these 2 funds is to have a conservative allocation of stocks to bonds. Here's some details on the Vanguard Short-Term Investment Grade Short-Term Bond Fund. Has a yield of 3.72%. Has a low expense ratio. Average maturity is 2.8 years. That's on the low side. Yield to date return is a minus 4.67%. Most bond funds are down as of this recording. Interest rates have been rising. Bonds have been moving down. Now, when bond funds price move down, typically the yield goes higher. We looked at our first sample portfolio for low risk tolerance investors. Now we're going to take a look at our second sample portfolio for medium risk tolerance investors. We're looking at the sample portfolio for our medium risk tolerance investors. This is going to have 60% equities, 40% cash or bonds. So we have 2 equity funds here. We have Vanguard Equity Income Fund. It's a mutual fund. And Vanguard High Dividend Yield ETF. This is an exchange traded fund. It trades very much like a stock. You can buy it during the day and sell it during the day. We're suggesting a 30% holding in the Vanguard Equity Income and a 30% holding in the Vanguard High Dividend Fund, and then 40% either in our cash or bond fund. We have as honorable mention Vanguard Wellington Investor Shares. Holds 65% stocks, 35% bonds. This could be substituted for either Vanguard Equity Income or Vanguard High Dividend. Let's take a look at details on our 2 funds here. Vanguard Equity Income is a mutual fund, 2.44% dividend yield, 0.28% expense expense ratio, which is low, and it maintains a fully invested position of 98% stocks. The year-to-date return is a negative 0.08%. Now, at the time of this video, most stocks and mutual funds, ETF funds, are down anywhere between 6 to 14%. The Vanguard Equity Income Fund has performed quite well compared to many other funds. Let's look at the Vanguard High Dividend Yield ETF. Has a dividend yield of 2.89%, very low expense ratio, maintains a fully invested position of 100% in stocks. Now that could fluctuate just a little bit during the year, but they stay pretty much fully invested. The Vanguard High Dividend Yield Fund is down just about 1%, and as we said, this is extremely good when you compare it to other stocks, ETF funds, and mutual funds. We've reviewed 2 of the 3 portfolios we put together. We've reviewed the low risk and the medium risk. Now we're going to take a look at the high risk tolerance portfolio. Here's our high risk tolerance sample portfolio. This has 90% equities, 10% cash or bond. What qualifies as a high-risk investor? It could be a younger investor that has time on their side, and it's most likely somebody who is an experienced investor willing to take risk. We have 3 Vanguard funds in our high-risk tolerance portfolio, and all 3 of these are ETF funds. 20% position in the Vanguard Information Technology Fund, 40% position in the Vanguard High Dividend Yield, and 40% position in the Vanguard Total Stock Market Fund. As we said earlier, right now the best thing to do is dollar cost average into the markets. If we get a buying opportunity down the road here, then we can do lump sum investing at that time. Now we have 3 ETF funds in our high risk tolerance portfolio, but that doesn't mean you can't purchase individual stocks or commodities to diversify your portfolios. Let's look at details on our ETF funds here. We have Vanguard Information Technology. We're not buying this fund for its dividend yield. We're mostly buying this for the growth in the stock. It'll maintain close to a 100% equity position, has a very low expense ratio, and the return for the year is a negative 14.87%. Most technology stocks and technology funds are down on the year as of the time of this video. On the right-hand side, we have Vanguard High Dividend Yield. Now, it does have a nice dividend yield of 2.89%, a low expense ratio, and maintains a high equity position. Year to date, as we said earlier, it's down about 1%, which is incredible. The Vanguard Total Stock Market ETF has a yield of 1.42%. That's not the reason we're buying this one. This one invests pretty much in the entire stock market. Has a very low expense ratio, maintains pretty much a 100% equity position, and its year-to-date return is a minus 10.38%. Now, when we talk about building wealth or building our retirement nest egg, we want to think about building wealth over a period of time. Invest for the long run. Get rich quick, slow, as they said. Now, there's nothing wrong with a hot stock or two. But keep in mind, many of those stocks are very volatile. They can go up fast and they can come down just as fast. When we think about investing for the long run, we want to be diversified in different asset classes. Here's 6 different asset classes. We have stocks, fixed income, cash, real estate, commodities, and alternate investment. Now, if you're just starting out investing and you're thinking about building your retirement savings for your future, we looked at 3 different strategies that could fit your personality. Or maybe you're a person that's already built a retirement nest egg and maybe you're wanting to use some different funds. So maybe some of these funds would work out for you. Now, if you're interested in hearing about the Charles Schwab best ETF funds to build your retirement savings, click on this link here. If you have any questions, leave a comment. Thanks for watching. Stay tuned for our next episode.